All right, Coca-Cola just reporting moments ago as well. Sarah Eisen joins us. She's got more on what the company's saying. Sarah, good morning.
Good morning, Becky. Beverages are a good place to be for consumers right now. This is a beat on all fronts for Coca-Cola. I'll just run you through some of the highlights on the numbers. $11 billion in sales. The estimate was 10.5. 69 cents for EPS. Estimate was 64. Organic revenue growth, which is always the key here, up 16%. That was a really big beat. And I think what's important for investors here in terms of the stock reaction is guidance raised, both on sales and profitability. Organic revenue now expected to be 14 to 15% this year, and that was a raise. And the interesting thing is, going in, there was a lot of worry about the strong U.S. dollar and how much of a hit that was going to be for Coke, which is very international. They said 9% on earnings this year, and they kept that. So Coke is one of those companies that hedges, and they can see their costs for the rest of the year. So that is going to be unchanged. Important overall for investors. I did just get off the phone with James Quincy, the CEO. I'll give you a little more color on what the company has been seeing. He said very strong, and we did well all throughout Q3, whether it's in categories, the sparkling or carbonated beverages, or some of the non, including some of the new innovations in Fairlife milk. He said they did well geographically, broad-based. For instance, in China, where they're still facing mobility problems, people getting around with all the COVID lockdowns, they still managed to grow. A big part of the story, like we've seen in so many consumer companies, is pricing. Of all of that sales growth, 12 points pricing for volume growth. So they still managed to grow volumes even with higher prices, whether it comes in the form of smaller cans or smaller bottles or just pricing a little bit higher. I asked Quincy about that. He said we're going to continue to see that into next year, the pricing pressure, the inflation in this category, because their costs are still high. And so they pass that on to consumers. Elasticity is kind of the buzzword this quarter. It means that they're able to do that relatively well with consumers. Consumers are still spending despite the higher prices, but he does expect that to moderate because you just can't have inflation rising faster than wages forever. Now, as far as the economic environment, I thought this comment was really interesting. Quincy went through what happens typically during normal recessions. Hard to tell if that's what we're in or going into. But he said you pull back, consumers pull back on discretionary items. They start to trade down by private label or less expensive brands. And then third, as they go through this process, they reduce the basket size in terms of what they're shopping. He says he's seeing all of that take place right now in the U.S. and Europe. They're still growing strong. They put a ton of money into marketing, advertising, and new innovations, but they are starting to see that softness, those storm clouds, as he says, gather in the U.S. and Europe economically. I will be talking to James Quincy exclusively on Squawk on the Street a little bit later, 10 a.m. Eastern. Back to you guys.
Sarah, Coke shares up by about 2.8%, so that's helping the Dow versus 3M, which has been under some pressure this morning after it lowered its guidance for the full year. While you're here, we got to talk to you about the other big story of the morning, and that would be Adidas actually ending its partnership with Ye, Kanye West. You sat down with him last month, Kanye West, before all of this happened. Adidas took its time getting here. They said they did this after a thorough review, but they're going to be ending the product line and stopping any payment to Ye's companies. As of this point, you can see that stock down by about 4.2% this morning. I think that's about the lowest level we've seen since 2016.
It's a really big deal. You know, it's hard to get the exact numbers of how much Yeezy makes up as part of Adidas, Becky, but some analysts estimate it could be as much as 10% of total annual revenues. So this is something I've been highlighting for investors for a really long time. You mentioned they took a while. Yeah, it's been several weeks. And we have asked for comment from Adidas nearly every day since Kanye West went on those dangerous hate speech rants against Jewish people. No comment. It's a little bit of an awkward time for the company because they have announced their CEO, Casper Rorsted, is stepping down. So he's sort of a lame duck CEO, but they have not announced a new CEO. And I think they were trying to punt this decision, since it's such a big financial one, until there was more clarity on that front. But obviously the pressure grew too large. One other thing I'd highlight in this release, there were some very carefully legally worded statements about how they own a lot of the IP. And I do wonder if they're going to sort of keep all of these successful Yeezy styles and try to rebrand them going forward. We're going to learn more on earnings. They report November 9th.
Yeah, the company's saying right now it's expected to have a short-term negative impact of up to 250 million euros on their net income for 2022. given the high seasonality of the fourth quarter. But we were talking about this earlier, Andrew, just is there demand for the product at this point, too? It would be interesting to see what sales have done over the last few weeks. Anyway, Sarah, thank you. We'll see you a little later today.